So look, when it comes to deciding where to park your money, you have two main options: credit unions or banks. Both offer similar services like checking accounts, savings accounts, credit cards, and loans, but just because they have similar services doesn't mean they're created equally. We start to see the differences when we look at things such as interest rates, product offerings, and convenience. So let's start with the biggest difference: ownership. Traditional banks are owned by investors, so their main objective is to generate big profits for their shareholders. Similar to credit unions, the operations are overseen by a board of directors. However, with a bank, the board of directors' main objective, again, is to generate those profits for their shareholders. Credit unions, on the other hand, are not-for-profit cooperatives. They are owned by the members that use them, and they typically work in your best interest. That's why you'll find lower fees, sometimes no fees at all, better rates on savings accounts, and a more personalized experience.